Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, broadcasting from Sonoma, California, where we're having a very special VIP event with many of our members. I hope you had a good week, and I hope you have a great weekend to follow. As we start off looking at the charts here for the diamonds, you will see that we hit my upside target from last week's report right there at 339.50. And as you can see from today's candle, we have a long stretch of green 4 days in a row with a shooting star that, oh, by the way, filled that gap right there. So as you know, 80% of the time gaps fill. And then once they fill, there's an 80% chance that prices will drop. So next week, I am forecasting a drop all the way back down to the low from back here on June 6th. So that's my forecast. Downside target, 334.76. Now let's move to IWM. You will soon see that we not only hit my upside target that I had at 183.94, but we blew through that target, and now we're starting to pivot lower. So I'm going to erase that zip line now that we hit that target and draw what I think we could see next week. I'm pulling this back to a roll reversal support level right around 182.53. I'm drawing that from this previous high here. See this little pivot point? That was a resistance high. Once broken on that bullish engulfing candle, will now turn to support. So my downside target for IWM is 182.53. Look down below. The stochastic is starting to hinge lower. The CCI is almost at a sell signal, and so I'm leaning more to the downside next week. Taking a look at the Qs, here's another one where we did a two-part forecast on this. Actually, it was a three-part forecast where I said we go up slightly, and then I said we would see a drop in volume. Now, it's really hard to see. I have to magnify that. You see that red vertical line there? That was what I was forecasting with regard to a drop in volume. Now that we had that drop in volume, we see on Wednesday we had a bearish engulfing candle. Today we have a doji, and we have the oscillators showing negative momentum or downside momentum. The stochastic crossed to the downside on Wednesday, and we have a negative divergence on that CCI. So I'm going to erase these lines and draw up my new targets to the downside. Again, it's going to be very similar to the downside target of what I had last week, but I'm going maybe a little bit further right there at 346.73, 346.73 for the Qs. Now looking at the spiders, which is the S&P 500 ETF, this was another three-part forecast, and as I mentioned last week, no one is going to do these because you're putting too much of your neck on the line when you do. But we did hit my upside target right there of 429.19, and look down below, I said we would see a drop in volume, and that's exactly what happened. And now I'm going to keep that downside target of 422.26 in place because we have that doji very similar to a shooting star, which is bearish. We have a negative or downturn in the stochastics. That's called a hinge to the downside. And we are a hair away from a sell signal on the stochastic with a gap below the market, very close to our price target of 422.26. Now that leads me to the VIX, ticker symbol VIX. Look what we have here. We have a very, very slight green bodied candle. And what does that mean? Well, when you have a small bodied green candle that falls within the longer previous red candle, that's known as a bullish harami. And after 11 red candles in a row, we finally got a green one here. So I'm keeping my upside target in place for the VIX at 1720. Look down below, the stochastic is starting to head up. CCI has already crossed with a buy signal. And so this is a wide divergence from that 20-period moving average, which I believe will result in higher prices. Now, for those of you, I'm throwing this in there, for those of you that trade silver, we had a wild week. I think that silver is going to pull back from here. I have a downside target for our members right around 21.02. We have a shooting star very close to this gap fill resistance. And so I am very, very close to selling 5% of my position. However, I have not done that yet. And if I do, I will make that public so that you'll all know what I'm doing with my silver position, but I will never be out of my position in silver 100%. I tend to sell parts of it and parlaying it. As it drops, I buy back more than what I had sold in the previous sale. So that's just giving you some insight into silver. And I'm basing a lot of that on the US dollar. This dollar chart is kind of screwy, but we're starting to flirt with that 20-period moving average. I think we'll get a little bit of a bounce in the dollar next week, which would be short-term bearish for silver. But ultimately, I think the dollar is going to drop right below that moving average, and that could put some more buy pressure on the precious metals. Now, let's go to what I started talking about last week, was the level of bankruptcies that was showing up in the first quarter. And this dark shaded candle, if you want to call it that, or bar, is showing the second highest number of bankruptcies in the beginning of the year in this first quarter. And so what that means is that we will most likely see a ramping up of incidences here of bankruptcies filings as we move forward into 2023. So keep that in mind. And I also showed everyone this chart with regard to the uptick in delinquencies for auto loans, credit cards, but I did not really talk about this HE revolving. What is that? That's home equity loans that people take out against the equity in their homes. And you can see that that slight magenta color or purple color is also starting to trend up. So I just wanted to highlight that because I did not talk about that last week. And this is, again, something that I think is extremely important, and that is the credit card interest rate. But here's the big news this week. If you're keeping your eye on California, tensions are mounting at the ports. And as a result of this, this could put some pressure on our supply chain, similar to what we saw in the COVID crash. So keep an eye on that story as it develops. This has come out through CNBC, and this particular author, Lorianne Larocco, has written at least 4 or 5 articles on this through CNBC in what's titled here is The State of Freight. Keep an eye on that, and also keep an eye on the Dow Jones Transports and some of the individual stocks that are part of that index as well. That could open up to some trading opportunities, both up and down. Now, finally, I want to show you this. This was the unemployment claims this week. And, you know, I talk a lot about the manipulation and what's happening and revisions and stuff. But here it is. They stated, this came out on June 8th, yesterday, that they revised the numbers from last week. They revised it up. And this is what we saw this week is the highest level for initial claims since October 30th of 2021. Now, obviously, that is not bullish for the economy. We're still waiting to see what the Fed does with interest rates. They probably going to try to talk into pausing, which will ultimately lead to higher inflation down the road. So I think that would be a mistake. But if they start talking more about pausing and actually pause, that could put a little bit more upside pressure, buy-side pressure on the markets. And then eventually I think we'll start to pull back again. You know, a lot of people talking about, oh, the bull market is back, the bull market is back. Maybe you might call it a secular bull market. And while analysts are very quick to be calling bull markets, they're very, very slow to be calling out on recessions, right? You have to understand that a recession is when you have a shrinking GDP, and a prolonged recession ultimately leads to depressions, which I think we will ultimately wind up in. And therefore, my longer term targets are still in place to the downside. I am not budging from the 2020 lows as my targets. And even if we go higher from here, there is a good chance that we'll see an M-top or a double top formation, which technically speaking is second most bearish to a number one head and shoulders top. So keep an eye on that. Any kind of a pullback from a double top is extremely bearish, and you have to watch how far the markets drop from those highs. So I'll be reporting on that for sure. Until then, you have a great weekend. I'll talk to you in the midweek report next week. And you take care. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. you might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte and this is my 7-point trading checklist.